All right, we are back, and it is Friday, and here we are for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing wonderful, man. Can you believe Christmas is like 2 days away or something crazy like that? It's amazing.
It is amazing. Merry Christmas, Happy Hanukkah, Happy Holidays to everybody out there. Today is for December the 23rd, 2023. Let's get right into it. Let's talk about home builders. What did you see this week in news with home builders?
Yeah, home builder sentiment came out, I think, on Tuesday. It was all kinds of bad. Although I am really starting to believe that we've seen the big crash in everything, right? Home builders cutting 30% of development already happened. They're not going to cut it again. Existing home sales, as we'll talk in a minute, crashed. But I think we're starting to bottom. So I think that the statistics that will come out month to month will look bad on a year over year compare. But what we're going to start to see is month to month, the housing market has found the bottom, a plateau, a vista, whatever you want to call it. And we're going to bounce around this for a while. So I'm not calling for any sharp recovery or anything, but we now know where the floor is and we can baseline and we can build from there. So even the builders, right? When you break down the home builder sentiment, uh, future expectations actually went up, right? It's a very early green shoot. But I think kind of the I don't know, roller coaster on the way down, we're kind of coming out of that. So it's an exciting time, and it's an exciting time to be a buyer for sure, because we have all this fear, and then we just coast from there. So it's I'm excited for what's coming.
I am too. I'm excited. I know we've been talking about this for months and months. Also, folks, the viewer, you're there watching. Stay to the very end. We're going to talk about housing crash. That's been a big headline. We are going to wrap with that. I want to continue. So let's talk about the consumer. Talk about consumer sentiment. What did you see this week?
Yeah, so consumer sentiment, kind of with my feeling that we're kind of past the worst of it. Consumer sentiment surprised to the upside and actually spiked to an 8-month high. So again, if you don't know this, the consumer drives the US economy. It's about 68% of the economy. The consumers being afraid could force a recession all by ourselves. And this is another sign that, you know what? Maybe the worst is over. Maybe we can just, we can get through this and we can have a little bit more unemployment, but maybe a soft landing is possible.
Maybe a soft landing. It's interesting, just getting out and about more than usual. Seems like whether it's a Target, a Walmart, or even a Nordstrom, everything's really busy, not overly busy, but it just seems to be people are out, they're spending money. People seem to be in the spirit of the holiday spending. Would you agree with that? We'll,
Yeah,
we'll see in January.
yeah, we'll see for sure in January. It'll be interesting. Again, retail sales, I think we talked about last week for November, surprise to the downside. So it's it's just a really amazing time to be an economist and somebody who looks at the economy, because we have all these cross currents going on, and then you layer on real estate on top of that, which is the most levered business, most affected by interest rates. I'm having a blast every day looking at all this stuff. So yeah, it's going to be interesting in January.
Absolutely. Well, stay tuned. So let's talk about interest rates. Interest rates, what happened this week, and what is your thoughts, views on interest rates?
Yeah, so interest rates are still in a downward trend. They're down 4 weeks in a row. Think about that. 30-year mortgage down 4 weeks in a row. Bank of Japan came out of nowhere, I think on Tuesday, it might have been Wednesday, and kind of raised their own interest rates, which kind of shocked the market for a couple of days. But rates kind of went down after that, after the market settled. I think generally speaking, rates are down. I think the average is like 6.3, I think. But I'm hearing from more and more buyers that they're getting something at 5.8, 5.7. So if you get the seller to pay half a point, you can get something sub 6. I think sub 6 brings some marginal buyers off the sidelines. And I know this to be true. I listed a brand new flip at the worst time of the year, like a week ago. And we got 5 offers. One of them was a creative finance offer, which was cool. The other 4 were FHA. Unfortunately, I can't take FHA because I got out in 42 days instead of 90. But that shows you the interest of first-time home buyers. So it's still out there. It's a lot of fun.
Well, again, you've been calling it. We've been talking about this for months. Obviously, as rates are pulling back, we're starting to see activity. Obviously, buyers are coming back. And of course, with good products like FHA and VA, obviously, we're going to see probably, would you say that you see this trend with interest rates continuing into January?
I would think I would think that rates will stay really close to 6% for most of next year. I don't think we're going to have the wild run up or the crash in rates. I think 6% will become the more normal level. Is it 5.5? Is it 6.25? Somewhere in there. I don't see a big drop to 5%, and I don't see a run up to 7 either.
Very interesting. So the thing that obviously is on everybody's mind every day in real estate, the housing crash, the housing crash. What did you see in existing home sales? And what are your thoughts about the quote unquote housing crash and where we're at today?
Well, the good news is the housing crash already happened. The housing crash has been confirmed. Again, you can go get this yourself. National Association of Realtors, NAR. I think it's nar.com. It might be nar.org, but you can find it. Just Google it. Just came out with November numbers on Wednesday. And we started this year at 6.6 million transactions. Yesterday or the day before was reported at 4.09. That, roughly speaking, is a 30% crash.
Yep.
It happened. It's here. I think we're really close to the bottom. I think rates settling out about 6%. I think, generally speaking, the economy being stronger than people think. Notice I'm not calling for any V-shaped recovery. I'm not here spinning, dreams of 6 million transactions. I think we're stuck at 4 million for the next couple of years, but we're not going to 2 million.
Yep.
Housing price, which everybody wants to talk about, year on year was up 3.5%, the lowest all year. I think prices are flat. I think they're rather boring because, again, I think we do 4 million transactions, not 6. And I think the focus is on first-time home buyers. Right now, National Association of Realtors put out 2 things that I thought were like eye-opening. Really 3, I guess. First, would it shock you, Ty, to hear that distressed inventory sales doubled?
Not a shock. Not a shock. We've been talking about this for a long time.
They went from 100 to 200, right? They're
Right.
still statistically low, but on a percentage basis, they did double. They went from 1% to 2%. Second, first-time home buyers, which I think will be a dominant force next year, will do a lot of transactions. They went up like 2 percentage points month on month. So pretty significant move.
Yep.
And then cash buyers went up percentage-wise. They don't care about interest rates. They borrow from friends. They have the cash. Whatever they do. So again, I think what we're seeing is first-time home buyers will be a big part of next year. Cash buyers are still a big part. And distressed inventory will tick up slightly numerically, but on a large percentage basis, because they were just out of the market for a couple of years.
Absolutely. And again, if for you, the viewer, the person that's sitting there and you've been watching for months and months, we've been talking about this. We've been talking about median value, better to stay under the median value. It's a safe place for fix and flips. You can still do those deals. Obviously, first-time buyers are still active. Again, distress is up, and probably, I want to just something we didn't talk about pre-roll, but we probably still will see some more layoffs potentially going into the new year. Yes or no?
Oh, absolutely. Oh, absolutely. Micron, chip manufacturer, yesterday talked about a 10% layoff. In tech and in finance, they're just coming. Goldman Sachs, 8% last week. Micron, 10% yesterday or the day before. It's just starting. White collar recession. It's going to be a white collar recession.
White collar recession. And then also, too, we believe that notice of defaults, pre-foreclosures, things of that nature, we will see an uptick. The headline could see, say, 200 or 300% up. But like you said, it's going from 1% to 2% to maybe 3%. Is that still your thoughts?
Yeah, numerically speaking, it'll be below average, but percentage-wise, it's gonna shock people. 487%. I mean, we can get some of those numbers for sure.
I like also, too, something we've said, and then even off roll, I've talked to a lot of friends, clients, people in the industry, realtors, lenders. Basically, my opinion of what we've been talking about the last 90 days, that probably the slowdown or the frozen market is behind us, and we should see things normalize, not a boom, but not this frozen indecisive. Buyers are probably going to come back and sellers are going to come back and normalize. Do you agree with that?
I want to be, this is nuanced, and it's only because you and I are buddies that I'm going to do this.
Please.
I think it depends on which of the three segments you're in. If you're in luxury, no bueno, not good. Stock market down. There was a statistic I reported today. The top 10% of income or wealth in Americans, right? Net worth, their net worths are down like 9% or something, right? A lot of that has stock market wealth, and that's not getting any better today, right? So I think luxury is tough. I think move up buyers, the people that have to sell and then buy, that are usually the big proportion of the market, still a problem. Not a lot of people want to trade a 2.5 for a 6.1 mortgage. All right. I've had people do the math recently, and their mortgage payment goes up 350% for one extra bedroom. I'm sorry, but the kids can have bunk beds. We're not doing that, right? But then there's the first time buyer. I think that market is going to be, it will probably be the healthiest market that we've seen in 3 years, because I don't think the last 2 years was very nice or kind to first time home buyers. I think the next year is. And then there's distress. As you know it, but we'll say this for the audience. There's three types of distress. There's a distressed property. I will buy those all day long. You have to buy them cash. Then there are distressed markets. Maybe you're in a market like San Diego, California, when the military left. Maybe you're in a boom town like North Dakota when the shale companies left, right? There's distressed markets. And like Boise, maybe Boise is a distressed, Phoenix, distressed market. And then there's distressed sellers. Distressed sellers, God bless you, who have mortgages, fixed rate debt, have an asset. So there's going to be a lot of transactions, sub 2 or novations or whatever they're called, assumptions. So again, there's those three things. So again, I think first time home buyers, healthy. In distressed situations, buildings or markets, I think there's opportunity. But luxury and move up, nah, no bueno, no good.
What a great read for you breaking it down the way. I love it. So let's finish with the housing bottom. What did you see this week with, are we at a bottom? Is it completely so? Or what do you see going forward with the housing bottom?
Yeah, something I started talking about on Monday that I really believe this is so, is we have found the bottom. It may not feel good, right? Doing 4 million transactions feels worse than 6 million, but it's not 3 million. It's not 2.5 million. So I think the bottom is right around 4 million. I think new construction right around where we are now, which for me is good, right? Because the only way we can get out of this is we got to get to the bottom, and then we can build from here. I think we're on the bottom for a while. So this is not some, V-shaped recovery. Could it be 4 quarters? Could it be a year? Yeah, it could. But again, we're here. So if you're making it work in this environment, make it work, see your competition leave. And, I like knowing it's the bottom. I feel good knowing it's the bottom because there's not another 50% collapse from here.
Well, there you go, folks. You heard it here. Obviously, we talk about it's a great opportunity in this market. Michael, Merry Christmas. Happy holidays to you, the viewer. Thank you guys so much for your support. I just want to encourage you. Here it is, the book, One Rental at a Time. If you have the book, you've read it, obviously, give this man a 5-star review on Amazon. If you've not read the book, go out and buy one. Actually, this is a great gift, even as a New Year gift, right? To give to clients, friends, family, people that you care about. Michael, you also came on Saturday and shared, and I got to tell you that you were at our Christmas, the unofficial Christmas holiday party. Everybody loved what you shared. I know we've got a lot of new viewers, people coming out. Is there anything you want to share with folks as we finish this year?
Yeah, one of the things I want to share, because that was a wonderful community you and the whole Sub 2 community have built, is as I shared with them, that's the spot to be, right? As we talked about earlier, there's 3 types of distress. And one of the distressed is the distressed seller, not the house, not the city. It's just they're in a bad spot. And they have an asset called a 30-year fixed rate mortgage. And I think we're going to have a 2 to 4 year run where that strategy is going to be amazing. So again, folks, I believe in doing the work, networking, squatting up, being positive. We're looking to build a community in Fresno as well. I've given Ty as much office space as he wants in the hub. So reach out to him if you're in the area and you want to be a part of it. Ty at tylg.com. Let's go. 2023 is going to be amazing.
I love it. Michael, thank you for all that you do. Merry Christmas. Happy holidays to everybody. Thank you so much.
Take care.